guys, I have a quick question for the audience before we get going. Who here has dabbled in crypto before? Anyone? Hands up. Hands up. Okay, cool. Well, I've not yet, but I'm definitely something I'm interested in, so definitely looking forward to hear more. So our next session is crypto payments. Are we at a tipping point? So we're going to have two speakers joining me on stage today. We have Julian Sarkadi and Ashley Paulus, both from checkout.com. So checkout.com is a flexible payment platform processing payments in the digital economy. Julian is the Director of Strategic Partnerships APAC. He spent well over a decade in Asia, focusing on building and leverage value-added partnerships to grow checkout.com in the region. And also, interesting fact, also worked as an investment banker and a lawyer. Very cool. Ashley Paulus is customer success globally for checkout.com for the crypto vertical, collaborating with merchants across the industry, including crypto.com and CoinHacko, to help optimize their payment experiences and boost customer conversion. So I guess let's welcome Julian and Ashley to the stage.
Good afternoon. How did everyone enjoy their lunch? Feeling sleepy or no? Good. Exactly. 5. I'll try and do it in 5. So yeah, really a pleasure to be here this afternoon. And thank you very much to Adobe and to all the sponsors of this event. And thank you all to coming and joining this talk. As mentioned, my name is Julian Sarkadi. There we go. I'm the Director of Strategic Partnerships for checkout.com, as mentioned. And today I'm going to discuss a topic that we hear a lot about. And I think that many of us probably have a lot of questions about this, myself included. I'll be the first to admit that I'm by far an expert on crypto, but luckily I have my colleague with me today who's a real expert and will join us in a couple of minutes, and we'll ask a few more questions. So today I'd like to start off by giving a brief introduction to checkout.com and some of our background in crypto. And then following that, we'll have a discussion with Ashley and delve into a little more detail on some relevant topics of crypto payment. And finally, we'll open the floor to you all to ask any questions you may have. So very briefly, who is checkout.com? Checkout is a global payment solution provider that helps leading brands drive more value from their digital payments. Our mission is to enable businesses and their communities to thrive in the digital economy. So since 2012, we've had the privilege to work with some of the leading digital brands, as you can see. For example, Netflix, Shein, Sony, in addition to fintechs such as Wise and Curve. And from around 2018, that's included many of the world's largest crypto players, such as Coinbase and Binance, to mention a couple. And because of the work we do in crypto, it's very important for us to stay on top of the latest developments. So in the beginning of this year, we did a survey of 30,000 consumers and 3,000 merchants to gain some more insights into crypto. So today, I'd just like to share with you some of the key takeaways from that survey we did. So we saw that the desire to use cryptocurrencies not just as an investment, but as a payment for everyday goods and services is actually on the rise. Around 40% of consumers we surveyed believed that crypto should be used for payments. Moreover, from the consumer perspective, at the time we conducted that survey, the same number wanted to use crypto payments this year. Now that sentiment might have changed a little bit since the beginning of the year with all the volatility, but I think it clearly shows that the mindset towards crypto has already undertaken a change and people are looking at it as a viable payment method. On the merchant side, 2 in 3 merchants saw significant upside in holding cryptocurrency on their balance sheet. However, the question remains, are we in fact approaching the tipping point for crypto payments? Before we try to answer that, let's look at the upside for merchants, which are pretty varied and actually better known than we had anticipated. For example, 82% of merchants in our survey who offer crypto says it has brought them new customers. Now, we're not talking about a huge majority of consumers that are using crypto payment at this stage, but I think it does show us the trend for those that do. 70% of merchants say that cross-border payments on blockchain are cheaper and faster than traditional payment methods. This is really self-evident, I believe. There are inherent costs and time factors with cross-border transactions, and blockchain is really something that is solving many of these issues. Finally, 80% of merchants say that payments on the blockchain are more secure than ordinary payments. I myself come from a payment fraud background, so I think we can see from the number of fraud prevention vendors around that this is a real pain point for merchants. And with credit card payments, for example, that's something that does exist and will continue to exist. But blockchain provides a much safer and secure experience. But even with all those benefits, 55% of merchants believe that holding any form of cryptocurrency is a risk. So what is next? We know that merchants and consumers alike are interested in this, but is it worth making crypto payments a reality? What are the benefits that merchants can reap today, tomorrow, and next week? And what are the obstacles to success? So we'd really like to get beyond the hype of crypto payments and talk about whether e-commerce merchants should be interested in crypto payments and exploring a safe and secure way that they'll be able to implement this. So with that, I'd like to invite Ashley up to the stage for a few questions. Hello. Thanks. Ashley, first off, could you please introduce yourself and tell us a little bit about your role at checkout.com?
Yeah, so my name's Ashley, and I lead customer success for crypto at Checkout. And essentially, me and my team, we look after all of the crypto exchanges that are interacting with Checkout globally. So this could be your exchange platform, the Binance, the Crypto.com, an on-ramp like MoonPay, or an NFT platform. And essentially, our role is to help our partners optimize the payments experience, to navigate the ever-changing regulatory landscape, and then to really act as the bridge between traditional finance and cryptocurrencies.
Great, thank you. The first question that comes to my mind and perhaps to other people is there's been a lot of volatility in crypto recently.
Yeah.
So how does that affect, firstly, those results of the survey we talked about, and in general, the sentiment towards using crypto as a payment method?
Yeah, so I think oftentimes people hear crypto and they immediately think that the entire industry is speculative trading. And that's not the case. And by the show of hands that we saw in the beginning of the conversation, I'm just going to do a really, really brief intro to crypto in general. So the underlying technology is that most digital assets are powered by is called the blockchain, and it's used for crypto, but also for non-crypto things. If you were vaccinated in Singapore, for example, your vaccination certificate is on the blockchain. You then have digital assets, that's the likes of Bitcoin or Dogecoin, and these are digital assets that have an inherent value to them. That's often what traders are speculating on and kind of what's dominating a lot of the hype in the market. But then you have things like stable coins, which are pegged to fiat currencies. USDC, for example, is pegged to the US dollar. Its value is going to be $1 today, an hour from now, 2 years from now. It will always be worth $1. You also have things like utility tokens, like Ethereum, for example, which is what you use to transact or interact with the Ethereum blockchain. You also have NFTs and CBDCs and a lot of different things. But overall, the volatility that we're seeing in the market is really impactful to one specific subset of crypto, but not to the entire industry. And it's really some of these other technological advances that we've seen and really the underlying technology that I think is most impactful for businesses.
So I touched on this a little bit before, but I would like to ask you, what are the benefits for merchants using crypto payments?
Yeah, so I think every business here wants to allow their customers to pay the way that they want to pay on their website. So a lot of our non-crypto exchanges that are offering crypto payments, they're looking to address a new customer cohort. And I think that could be really hard for us to figure out who that is. Specifically, if you're in Singapore, your salary is being paid in Singapore, it's a very stable currency. But think about if regionally you're trying to address customers who are based in Vietnam or Cambodia, and their salaries are being paid in Vietnamese dong or don't quote me on the Cambodian currency, real, I think, but obviously these currencies are impacted by inflationary pressures and macro factors a lot more. So these customers are going to likely move and their money onto the blockchain, and we're going to see this in more and more frequency. And so being able to offer them an easy way to pay really opens up an additional customer cohort for your business. On top of that, if you're an e-commerce merchant and you're currently offering Visa and MasterCard rails, there are bodies who are taking fees and charging fees at every point of the transaction. So you're needing to pay the interchange bank, so the person who issued your customer their card. You're paying the scheme fees to be able to move the transaction across their rails. And all of these fees are impacting the revenue that you're able to generate from each transaction. So crypto is quite interesting because it removes all of these intermediaries and the fees can be much lower.
And as a merchant, what would you say are the main barriers or the main barrier to crypto adoption?
Yeah, I think the biggest barrier is obviously regulation. Merchants want certainty. They want to be sure that the means of payment, the mode of payment that they're offering is going to be a valid one now and in the future. And so I think that, again, one of the biggest barriers to mass adoption is going to be creating regulation across the board. Good news is, I think something like 95% of the world that has a regulatory body has a team that's working on crypto in some capacity. So we're there, we're just not all the way there yet.
Picking on stablecoin settlement specifically, when and why would a merchant want a stablecoin settlement solution?
Yeah. So any e-commerce platform that's using a PSP partner, including checkout, you are receiving your funds Monday to Friday. And that's because your settlement bank is restricted by banking hours. So the biggest benefit of stablecoin settlement is going to be the 24/7, 365 liquidity. You're no longer constrained by things like public holidays or time zones. The other piece is that anyone who's received a payout from their PSP has probably had an instance where that transaction failed. So we see this at checkout. We'll activate a settlement payment. It will leave our banking partner, move to the merchant's settlement bank, and at some point there will be a point of failure, and so the transaction won't be able to go through. When you are transacting on the blockchain, these transactions are not only instantaneous, but those points of failure are reduced. So again, when you're trying to get two SWIFT networks to speak to each other, if it's an international transaction, or even two domestic banks to speak to each other, there's points of failure that are outside of our control, and USDC settlement, or any stablecoin settlement, actually reduces those.
Thank you. And Ashley, before we open this up to Q&A, for any merchants here listening to this, what is the one key takeaway you'd like them to understand from this?
Yes. So first, I am not a crypto expert. I spend a lot of my time thinking about crypto and working with some of the coolest crypto companies. But anyone who tells you that they're a crypto expert, you run away from that person. It's an industry that is changing every day, every month, all the time. But what I would recommend, the key takeaway I would say, is that technology constantly evolves. You never go backwards. And so while it may be hard to fathom about how businesses can make crypto or stablecoin relevant to them now, this is the way that our industry is evolving. This is the way that e-commerce is evolving. So every business, small, medium, and large, should be thinking about what their strategy is going to be around this, whether that's crypto acceptance, whether that's stablecoin settlement from their PSP partner, whatever that is, it's time to start thinking about it now so that you're ahead of the curve in the future.
So I'd like to open up Q&A to the audience. Any questions you always wanted to ask but were afraid to, please feel free to. Yes, Maurizio.
So when it comes to online payments and cryptocurrencies, at the moment there are several different things. So would for example, checkout.com allow to pay with any of those currencies, or would the merchant have to select which one that they want to pay with? And if you have to return a good, how do you then return the transaction?
Yes. So I'll break that down into a few parts. So first, if we want to offer crypto on our website, which do we offer? How do we decide? Truly, again, because this is such a new piece of technology to check out as well, for us at least, it's blue chips first. So it's the likes of Bitcoin, it's all of the stablecoin options that are available. Those are the most dependable. Those are very safe and secure platforms. So those are the ones that we would recommend all merchants to offer to their customers to be able to pay. The next question is, I think more around like, what do we do about refunds? What do we do about chargebacks? So there's no chargebacks in the decentralized world, right? It's not in the rails are not built in the same method that the schemes are. So you won't be able to facilitate a chargeback in that same way, but a refund would just be another transaction on the blockchain. When you're currently processing a refund with your card partners, they're actually reversing that transaction, so almost like it never happened. However, once something happens on the distributed ledger, it can't be changed. So you would then need to make another transaction to the customer to refund them for goods and services not sold, or if they're returning any type of product. That's fairly simple. You're able to do that by interacting, and there are a lot of partners who can help you kind of facilitate what that would look like.
I have another question.
Go for it.
So far, with the companies that you've been working with, what kind of industry verticals are adopting this as, like, who are the pioneers? Because it's not something you see every day.
Yeah.
And I guess you need a certain kind of customer base to be able to do that for it to make sense.
Yeah. So what kinds of customers are using this? Like, who's pioneering? So again, split into two parts. It's accepting payments by crypto. Who are we seeing this happen with? A lot of e-commerce, a lot of luxury goods, Hermes, Adidas as a normal luxury brand. They are looking to offer, again, additional ways to pay. Businesses that do a lot of cross-border transactions, so they have a lot of customers who are in countries with volatile currencies. Maybe you have a big customer base in Turkey. Maybe you have a big customer base in, again, the Philippines. These are great places for you to start offering crypto as a payment method. But from a B2B perspective, it's really interesting actually seeing the types of merchants that need a stablecoin settlement from their payments partner, for example. All merchants need access to liquidity. That's something that everybody wants as often as possible. So we see the demand coming from merchants who are using a lot of cross-border partners, again. So maybe they are looking for stablecoin settlement from their PSP partner. So again, the transaction on your website could be via Visa, MasterCard rails. People are using fiat currency, but the money that's being settled to you as a business is going to be in stablecoin. Maybe you have partners who are based internationally, and so you need to make that cross-border payment. You're removing the FX fees if you're being settled in USDC and able to, again, move that money instantly on the blockchain. Additionally, you have merchants who are using it for treasury benefits, which I think is really interesting. With like traditional fiat kept in your bank, you're maybe getting 0%, 1%, 2% interest, not to mention, depending on the country you're in, you could be getting a negative interest rate. But there are regulated, reputable partners that are able to offer you 4 or 7% interest on your staked stablecoin, USDC stablecoin, which you can immediately trade back into US dollars just as soon as you can. So it's really interesting. But there's a lot of different use cases that different businesses are looking to employ. It really just depends on what you're doing. You're welcome.
Yes, please.
Oh.
This question is about technology. You are a valuation $40 billion company. and we have recently raised $1 billion in the official talk. So my question, just to tell you, I am very familiar with the situation. So the question is about how much money and time you spend on fraud prevention. Because fraud is, well, as in any payment or monetary system, API, protocol, platform, whatever, it's the number one thing that not just ordinary code proposal, but is a target for hackers. The reason why I ask this is because at the checkout point is one of the most lucrative ways of stealing money out and also doing Wall Street and money laundering. So can you give me deep dive answer? Thank you very much.
So I can answer a little bit on that. I think there's two sides to that question. On the first side, when we are onboarding merchants, we have a very stringent KYC underwriting process. So we ensure that we know who we're dealing with, the merchant. On the other side of the payment fraud side, which is an area that I have a background in, we do have a fraud solution as part of our payment tech stack. And that uses a combination of machine learning rules. We also work with 3DS, 3D Secure. So we have a combination of in-house fraud tools. And in addition to that, we do also partner with external fraud prevention vendors. So we really use a combination of both those tools, depending on the type of fraud. If it's something that is more specialized, that perhaps we don't have the expertise, then we can bring in one of our fraud partners to help. But you're 100% right that payment fraud is a huge problem. It costs merchants billions, tens of billions of dollars a year. So you're absolutely right. So it's a big problem that fraudsters are often, one step ahead. Fraud is very complicated, and fraudsters are always looking for ways to exploit loopholes. So you have to be very proactive.
I think you missed out one very important point, which is insider trading. Insider fraud. This is a very consistent crime across any platform, anywhere in the world, on any issue. So insider fraud, give you a most recent example. It's like in OpenSea, the guy just denied, 2 days ago, that he didn't commit this. I'm sure you know the crime. So in payment platform, anyone, you cannot exclude this factor. So how do you tackle this problem? As in monetary fraud versus exploits and vulnerability.
Yeah, that's kind of beyond the scope of certainly what I do. And in terms of, we have, a legal team, underwriting team. But yeah, I'm not really able to comment anymore on that simply because I don't know that side of the business. Yes, please go ahead.
Hi, I'm Ranjan. If you have a standard advisory on merchant settlements, can you elaborate on that? How you advise your merchants on crypto settlements?
Tell me more. Like, how would we advise the merchant to utilize?
Settle the payments from the customers back. Do you have a standard advisory, or does it vary?
It varies. It definitely varies. So it varies on region. So where is the merchant based? Obviously, there's a lot of regulatory factors that are impacted there. Crypto penetration is going to be a big one. What are the most common tokens? To the earlier question, what are we recommending that you're offering to customers? I think one of the USPs of Checkout is that our systems are really geared towards enterprise clients, SMB clients, and we really look to tailor our solution to whatever the merchant is looking for. So we don't have a standard playbook as such, but we look more to work directly with the merchant, get a better understanding of your customers, and then make a recommendation from there. Yeah.
How are we doing for time? Do we have time for one more question? Yeah.
Go for it.
Please go ahead.
I'm just curious, what is the risk appetite of merchants once they receive Bitcoin or USDC? Do they immediately convert it to fiat, or do they have how comfortable are they with getting the currency?
Yeah, I think it really depends on the business. So we see a lot of our businesses, I'll use a Singaporean-based e-commerce business as an example, who does a lot of business with suppliers out of Germany. And so previously they would move funds, fiat currency from SGD into USD, and then have to send that USD to their German partner's USD bank. Again, there's FX implications there. There's fees hidden and explicit from both sides of the banking structures. With stablecoin, they don't need to do that. So they're looking at how can they remove some of those FX costs, remove some of those banking costs, so they'll keep a certain amount of funds on the blockchain and then move others back into fiat to make payments to local suppliers or to make their salary payments. With crypto businesses and crypto exchanges, it's a little bit different, obviously, since a lot of their business, a lot of their suppliers are there, even a lot of their salaries are paid in crypto. I would say that there's no one big or small that has a fully blockchain-enabled back-end strategy. Everybody is still processing some form of currency in fiat, and so most merchants are moving a percentage of that, obviously, back into their local currency.
I think, please go ahead.
Yeah. So for the solution where you with crypto acceptance for merchants, is there an option for them to off-ramp straight away so that they settle in whatever currency that they prefer?
Yeah, of course. So at checkout, for example, you can off-ramp that into USDC immediately. And our USDC product is pretty cool, if I do say so myself. It allows you for 24/7 settlement, weekend settlement, which is quite interesting as well. So if your risk appetite is low to this point and you want to just move everything off as quickly as possible, then you can immediately move those funds from your BTC wallet, for example, into USDC and then move those funds off into fiat currency.
I guess there's potential slippage or impact risk that either the customer or checkout.com have to assume certain risk. How does that reconcile this?
Yeah, there is the risk of slippage. There is obviously because of slippage, because crypto prices. So, for example, if you were transacting in BTC, the price is so volatile it can change minute to minute. That when you were looking to off-ramp that, there could be a big impact, right? And that's what I'm assuming you're talking about. The risk that you assume. It really is dependent on the relationship. It's dependent on the currencies that you're accepting. It's the volume, again, assumed volatility, daily averages. At checkout, the appetite changes depending on what's happening from a macro impact, right? But yeah, really good question.
If no more questions, I think we've reached our 30 minutes. So thank you all very much for your questions, for your attention, and hopefully we've given a bit of insight into crypto payments today. Thank you very much.